Hi guys, Mark Shawson here with your weekly video report for the week ending September 4th. In this report, I'm going to review a couple trades we did at the end of last week, and then I'll go ahead and review a couple of great trade setups that I see going into next week. So the pattern that we have in front of us is for the Nasdaq 100. And for the subscribers that have been on board for a while, you know that I made a bold call back here on July 27th where I predicted the crash in the Nasdaq. We took advantage of this entire move down, and now we're looking at price action going forward. So as I indicated, my prediction back in July was for the Nasdaq to fall to 3,900. It went to exactly 3,902, and it's bounced since then. But last week we saw the emergence of this key reversal into a downtrend, and we advised our subscribers to sell right here at the price level 42.21. It cracked that level and closed at 41.96, and we're currently sitting on a 36-point profit. I'm still looking to stay short this market. I think prices can go down and fill this area here, and then I'm a little uncertain as to where prices go from here. If you recall, when we made this prediction based on this reverse wedge triangle, we said that the reverse wedge triangle is an inherently unreliable price pattern, and that the failure rate for this is very high. So basically, I said that it could be likely that this market has 3 touches, and right now we've had 2 touches at the 4,300 level, where it looks like we're going to bounce off that again. And if we start going back for the 3rd time to the 4,300 level, then it would be a good indicator on the upside. But for right now, this market looks weak. The key reversal last Wednesday did some damage here. And as I indicated, I still expect us to come back into this area right here. And we've got a sell limit to buy it back at around the 40.75 area. I'm still holding on to this short position, and I'll be watching it very carefully. We are going to keep our stop in the original place at 42.39 in this market, and we'll be watching it closely. The second signal that we sent was in the pound versus the Japanese yen. And based on this double top, we've been looking to go short in this market at any signal along the way. And last week, based on this key reversal here, where prices made a new high, closed back and settled on the low, we advise you to sell short this market at a price stop of 182.67. When prices went through that, they smashed through that, and they went about 214 pips lower to a closing price of around 180.53. We're still advising our subscribers to stay short. We're going to look at the market action to see if there's any support here. But for right now, this market looks very weak, and we're sitting right now on a almost 3-to-1 risk-reward ratio based on where we put our stop. So again, this is a very important ratio. You divide the risk into the amount of profit that we have, and that's how you come up with the risk-reward. And that, is, I think, our big advantage is that we look at trades that extend for days, weeks, or months on end. We look to take big moves in the market when they occur. We're not just going to take 10 or 15 pips like most traders do. And so right now, our subscribers are sitting on a 200 plus pip profit in the pound versus the yen. We do have a buy order just above the 178.70 area. We're going to stay with that limit, but I want to see how this market acts. If it's going to go further and lower, I want to take advantage of that. So those 2 trades sent out at the end of last week gave our subscribers a huge windfall going into the end of last week. So now I'm going to review a couple trades that I think could actually add to the extended profits that we've already generated for the month of September. So before me is a trade in the the euro versus the British pound. We'll be sending this trade to our subscribers for the week beginning September 6th. So this is the double bottom that I was looking at in the euro versus the British pound. And if you recall, we saw an inside day bar here. We sent our subscribers a buy order at 70.97. This market exploded through our buy stop. We ended up getting out at 72.85 for a 10-to-1 risk-reward ratio. We made over 285 pips in this initial move. Now the market's been in a coiling phase. We saw the emergence of this key reversal, and then on Friday we had this inside day bar. So we're going to go ahead and put our buy stop just above this inside day bar. This looks like it could be a great trade. We could be coming up to these upside limits around the 75 area, about 150 higher from where we are now. So I think that this has all the criteria we look for in a trade, where you have the pattern set up, you have a couple of insurance day bars in the form of a key reversal and an inside day bar. We're going to let the market confirm our analysis by putting our buy stop just above there. The value of the buy stop is if the market doesn't go through there and goes back the other way, no harm, no foul. The order is not triggered. We're not in. Conversely, if the market is, if our buy stop is triggered, it's likely to confirm the momentum of this trade, and I think it's going to be an explosive trade in our favor. You know, by definition, a double bottom is a bottom in that market, and we expect this market to continue going higher for weeks or possibly months. So this could be another step in this market going higher. So I think that this is a great risk-reward trade, and I'm pretty excited about the potential here. The next market that I'm focused on is the light crude oil. This is the WTI light crude oil market. As you can see, our analysis conforms to a number of different diversified markets. We look at a number of different trading instruments. And as you can see, the light crude oil market has been in a profound bear market, a down market, going down for some time. And then last week it just exploded in what looks to be like a short covering rally. These are typically not long lasting, just to flush out all the weak hands. The market went from a low of 38 last week to about the 49, so it was an explosive rally. But now we're starting to see that this rally looks like it's going to start petering out. We see the emergence of this double top formation. Then on Friday we had this appearance of this inside day bar in the form of this insurance bar, an inside day bar where the high and low of this bar was within the high and low of the previous day bar, hence the name, the inside day bar. We're going to put a 69. We will email you the stop loss and take profit on this trade. So I think both the Euro Pound and the light crude oil look like great trades going into next week. And as always, we'll keep you advised. So we wish you a happy, healthy, and prosperous trading day. Until next time, take care. Bye-bye now.